Well, hello everyone. It is June 5th, a few minutes after 12 Eastern, and we are back with our last edition this week of Chart the Markets, which is brought to you by our friends at FEG Token, which is fegtoken.com, and smartdefi.com, as well as BYDFi Exchange. And there is a link to open up a BYDFi account if you don't already have one in our Twitter posting, and you'll see it also on the Blondhouse TA YouTube description page so that you can be eligible to win our trading bonuses that we give away every week. You just have to be signed up with that link to be eligible to win. So here we are, end of the week, almost to the end of the week. And sometimes I'll be honest, I struggle about what can I talk about that's interesting this week that these people haven't heard already before. And chances are there's probably nothing that I could talk to you that you haven't heard somewhere before already. But it kind of caused me to reflect on my own journey and what it was like for me when I first started out, or really started to get into this. And I realized that the very first time that I experienced a volatile market, that I reacted to it in a way that today I would not do. And I think one of the things that's happening in the world is that whether you're an investor or whether you're a trader, the volatility that exists in this market is and feels somewhat extreme at times, and causes problems when you're a trader because you've got extreme moves up and down. It makes it difficult when you're investing because it just makes it difficult to plan, and the list goes on and on and on. But this volatility, which is essentially just these extreme price movements up and down, can really make our lives miserable in the process of trying to get on the right side of things when we're trading. And all of this volatility is caused by what? All that market noise that we talk about. All of it. Whether it's economic data, whether it's individual company news, whether it's global events, the list goes on. It's, the speculation within the market alone. There's so many contributors. But ultimately, it's the root cause of making the market feel like it's crazy. And we have to find a way to manage all of that craziness. And I was thinking back to my first experience with a volatile market and how I reacted to it at the time as a chartist. And here's what I did. I was looking at what appeared to be a crazy market and a crazy economy and a crazy situation, and I thought that I needed some special sauce, a magic wand, I don't know, to try and figure out what nobody else could. That's what I was trying to do, I think. In hindsight, being 2020, I believe that's what I was doing. I mean, how did I do that? Well, I started experimenting and trying to learn new technical indicators, new methodology, all of that stuff. And I spent probably more time doing that than I should have. But all that I did was, again, this is in hindsight. At the time, I don't think I would have said this, but in hindsight, all I did was just create this wheel of analysis paralysis, right? And I didn't have the same understanding of the market and the same belief system in technical analysis that I do today. I didn't believe the way that I do today that what we see on our screen is a language, right? A real-time representation of what money's doing, not what people are saying. It's all based on mathematics, and mathematics is a language, so this is obviously a derivative of a language and one unto itself. And I didn't look at the market with the same discipline as far as current price revisits past. Break one level, find the next. Look for the volume shelves and gaps to trade in and out of them. That wasn't my core trading principle at the time. It was more technically based, that I would just throw a whole bunch of measures against the chart to try and find a solution, but I wasn't really listening to it and I wasn't following it. I was basically trying to figure it out. And if I was to continue down that path, I would spend my entire life trying to figure it out and getting nowhere. You know, we're all looking for that special answer that doesn't really exist. So how did it evolve? Like, how did I evolve my trading? Well, because I don't like to think too much, I just did less. Right? Once I understood that the market was a language and that price will behave in certain ways in a repeated fashion, and that gives us the ability to start to track it and trap it in a range so that then we can effectively trade it. And I learned of so many things over the years that I wish I knew way, way, way back when, right? Of course, this is not always the way. And I guess that's what I'm trying to share with you today, is maybe fast tracking a little bit if we can. Like, I wish I would have known the system that we talk about back then, because it would have made my life a lot easier, and it would have, I think, allowed my progress to accelerate, so that I wouldn't be fixated on, you know, the thick of thin things with just layers and layers and layers of different indicators trying to find a solution, instead of listening to the market, taking its cues, and doing what I was told by the chart. And I can assure you, those are two very different things. And because I get a chance to talk to a lot of you during the week, it gives me a chance to kind of to look back and understand what you might be going through at the time. And I think that there are many of you that are indicator focused, right? Technical analysis is about indicators. That's what it's all about. And, you know, maybe that's true to a point, but it's not completely true, at least in my opinion. I believe it's a language, and it's up to us to learn it, and once we learn it and understand it, we can interpret what happens on the chart with some reliable probabilities to allow us to make safe, profitable trades. And what you're looking at on your chart right now is two indicators, aside from your candlesticks. You have a T-line, which is referred to as the 80 MA, and I use the 5 EMA as a trigger. And when I say trigger, I'm just looking for simple crosses on whatever time frame. That's it. Now, is there something unique to the T-line? I think so. A lot of other people would agree. But there's a lot of good things about a lot of methodologies that we use. I do prefer trading the T-line. Why? Because of its simplicity. It is simple to understand, and it's simple to use. I add a trigger in a shorter time frame just to give me indications of when the market might be changing its mind in its direction. You got to remember, nothing goes straight up and nothing goes straight down. And if you've traded with leverage, you understand what I'm talking about. No matter how much of a head start you think you have, if you're using too much juice, you're going to see price come back and take away all your money. But the chart will tell us what we need to know. It doesn't know at the time whether you're leveraged or not, but it'll tell you what price is going to do with some reliability. And it doesn't take 1,000 different indicators to figure it out. It just doesn't. So all you have on the chart, that yellow is at 80 MA, which is the T line. The other is the 5 EMA. What's unique about this is it's part of our script where it will now change colors when it senses that the direction might be changing. Instead of waiting for the confirmation, it'll give you a little bit of an indication by changing color that it might be sensing a fade. And what we're looking at is the 4-hour Bitcoin chart. We can use this on any time frame. But although the market feels like it's gyrating all over the place at times, and let's keep in mind that the noise in the market that so many of us are attracted to, the opinions of other people, and the list goes on, that's the noise. Along with that volatility and up and down in price, that added noise during that time just adds to the chaos. And we talk about blocking out the noise, and one of the ways you block out the noise is by paying attention to the chart. Now, we've simplified it for you so that it can't get too much easier. We know that when price trades down below these levels, we're in a downtrend. And that there really isn't much use in longing these candles, either unless you're scalping or you're looking for a simple trade. But this is a downtrend. Pretty simple stuff. No matter what the market is doing intraday or on a monthly basis, or the up and downs of red and green days, some of which are very extreme, the market will tell us, if we follow its lead, what it's doing. This Bitcoin 4-hour chart is yet another example, right? These big candles, that's just volatility. And then this big red candle, but what do we notice? If you're short and this flushes you out, that move higher, maybe it stops you out, don't be upset about it. Nothing to worry about. The divergence that we need to see to determine whether or not we're in a downtrend is still there, and we don't have any confirmations that the trend has changed, allowing you at this point here to re-enter short if that's what you were trading. And you can feel confident doing that when you see those equal tops and you see that divergence still in place. It just gives you an opportunity. But the market was telling you during all of its craziness what direction it wanted to go in. All we have to do is follow it. Now, if you were looking at the daily Bitcoin chart, which I know a lot of, we all do, the same indicators are on this chart. One of the questions I always get asked is when to buy and when to sell. That's why the script exists, right? Partly because it tells me when to buy and when to sell, or at least get me in the neighborhood of when I need to make those decisions that help me make a safe but yet profitable trade. And it's not that hard to figure out. We have two opportunities. We feel this is a bottom and we start to see a change in color in our shorter term MA, which is telling us that maybe there's a change in direction coming. A couple days later, you get a confirmation. And even if you entered in here, are you complaining about it up here? No, you're not. You're thankful that you understood how to manage the volatility and noise in the market. And this is just by two simple little things. I'm not showing you a MACD, Not showing you an RSI or stochastic RSI or the Fisher transform or a whole bunch of other things that I see on people's charts. 2 simple EMAs. That's it. Are there some other parameters in the background working here? Sure. But as far as what's on your chart, that's it. Now, if we want to just add a simple layer, but very, very powerful layer, what do? The first thing I'll do is add a volume profile. And by the way, this is something that I didn't do 25 years ago. The volume profile wasn't something that was kind of in my repertoire. It was only later on until that I discovered it and figured out a way that I could incorporate it into the way that I was trading, which was evolving to now. And I learned a lot about the volume profile in the time that I've been using it, in the years that I've been using it. And one of them is that it helps you trap price. It gives you support and resistance areas based on the lower value ranges, which is this, the upper value ranges, which is this, the point of control through the center, and then these gaps. And we've shown time and time and time again how we can trade in and out of them on any time frame. And what it does is, just as an example, if we get a signal here, just as an example, what the volume profile helps you do in a very simple way without doing complex calculations in your brain as you're looking at it, it gives you areas of where traders have been and where they have been not been. The areas that they have been will create something like the point of control in the volume profile. That area where buyers and sellers have shaken hands in the past. This blue zone is also still considered part of that, and then these are the lower ranges. Price will like to range within it. And you always know that when you're looking at your chart, if you're not looking at the volume profile, but you see the POC, you know that that's the largest shelf we have, and there's probably gaps on either side of it to some extent. Because we have a job where we have to try and determine where price is going on any time frame that we're on. We have 3 choices, up, down, and sideways. That's it. There aren't 100 choices for us to figure out. There's only 3. And price likes to go higher statistically, roughly 7 out of 10 times. So that eliminates some of the work, doesn't it? It's kind of all about probabilities in a sense. And we have to do what we can to make those safe, profitable trades and increase the probability of that happening. If you're too engaged in your indicators per se, then you will probably miss a whole bunch of stuff when you really need to see it. And it becomes less of a worry about the why. Why is this happening? Why is this happening? Why did price go up today? Why did price go down today? Shouldn't it be doing this? Shouldn't it be doing that? I don't know. I honest to God, I don't know. I have no clue. All I know is that Bitcoin on the 27th of May gave us a nice doji at a top, and our 5 EMA changed color on us, which means it sensed a fade, and a couple days later you get a confirmed sell signal. And ever since then, price has been trading below the T-line and the 5 EMA on the daily. That's all I know. Do I know what's coming tomorrow after this candle? No clue. Do I give a crap? No, I don't. I'm indifferent to price. And guess what? It makes my life a lot more simple. which is all I'm trying to do. I don't know, neither do you, why price does what it does. This is all about money flows. It's about what money is doing, not what people are saying. That's why you're confused, because you're spending too much time listening to what people are saying, and then when price does something, it makes no sense to you when it's counterproductive to what you've been told. The only thing that matters is this. On any chart you're reading, all I know is Bitcoin's fading. That's what the chart told us. That's all you guys got to know. The why stuff is not important, right? And when price was up here and starting to fade, what do you think our targets were? Well, the upper value range, obviously, which you found. And then based on just this simple bit, what we have here, what would the next target be? Maybe the point of control. Fail one level, find the next, and that refers to and is applicable to the value ranges in the POC and moving averages and levels of past price and liquidity. Fail one, find the next. This just becomes a target. That's all. We've seen this a million times. You're short to the upper value range if you're at the top. And when you get there, you figure out what you want to do. If it still looks like your trade is intact, which it was, obviously, you're probably going to let it run. And this is where a lot of people get faked out. Now, you can trade those three green candles all day long. There's nothing wrong with that. Right? You're going from 103 to 105.8. That's almost $3,000. There was a way to make some money there. But did it change trend? No. How many times do we show this? Every week. Every Tuesday and Thursday. We see price looks like it wants to rebound. The whole world gets excited. Doesn't matter what the ticker is. And as long as this divergence is intact and these candles are doing nothing to change that dynamic, guess what's going to happen? You're going to move up, arch down, and take out the previous wave's low. And in doing that, where would that put us? It puts us, that previous wave's low, into this gap. Right? It puts us into these gappy areas. And we know what happens when we get there. You fall quick. Remember, was it last Thursday? We were talking about, hey, where's this 4 hour going to find itself? And we said, probably going to find the gap, because we knew this was the gap, upper value range. This is the POC, so we know this is a gap up here, and it found it. Right? The chart didn't lie to us. Right? It did exactly what we thought it was going to do. And it was a simple analysis that, hey, we have a confirmed downtrend. We have a big gap with the point of control at the bottom of it, which is a draw for price. Is it reasonable to think that, hey, unless a boatload of money comes in to change direction, and as long as we can confirm that that money's nowhere to be seen, because that's what this divergence is telling you, then you stay short. And you stay short until that trade's invalidated. Now, whether you paid the insurance, like this is the if you took this signal and you paid the insurance up here, that's okay. Or you entered in and around here, that's okay too. You're big people, you're grown-ups, you can make your own decisions. We just want to give you the right tools to make them with. And if you're using proper risk mitigation and you're running stops, yeah, you might get stopped out, but that's okay. Like, you'd rather get stopped out, lose a little, so that you can live another day to make a lot. Right? Set the stops, follow the chart, just do what you're told, you'll be okay. And it doesn't invalidate, doesn't mean you're wrong when the chart bounces or anything like that. Where did this bounce take you? right into the volume gap on the way back up. And I'm sure there's a few other things in here that are giving us support and resistance. And again, this doesn't matter what the chart is, although this is getting kind of heavy. If I shorten the time frame, I think we're going to see it. This is the volatility we're talking about, boys and girls, isn't it? These giant moves up and the giant moves down. And there's no way that you're ever going to be able to like catch the very bottom of these moves and catch the very top. It's more than it's more than a difficult thing to do. However, that said, if you're following this 15-minute Bitcoin chart, and the operative word was following, did the chart give you an indication of, I don't know, maybe there's something going on? It did, right? This is the example. This is the 15-minute Bitcoin chart. This is the example of it sensing a push up and gives you a little bit of an early cue before the confirmation that price has got something in mind. We had no idea that this candle was going to be a $250 candle. You just don't know these things. You just have to be at the right place at the right time. But you do see the shorter time frame saying, hey, maybe we're changing our mind. But what's really interesting, again, is you see the divergence that's created, right? So you've got a shorter, the 5 moving up through the T line, and then boom. You have no idea it's going to be a move like this. How do you know when it's over? Do we have any sort of a clue on this chart that maybe it's time to either take profit or take it all? Anything? Yeah. We've programmed that right in for you. That's right. To make it that much easier. Because again, you don't know what comes next. And where did price go? Right back down to the lower value range. So just to put it kind of into context, if you would have took the long down here, note that the long came off of the point of control of the volume profile. That's this red line here. Simple stuff, right? We know that there are areas of support and resistance. We know that's an area of where buyers and sellers have shaken hands in the past. And when we actually scope it out, we can see that it is very supportive, and this is where moves higher have come off of. You get a signal off this area, regardless of which one you took. You had a parabolic move up. Whenever you see this divergence get intense like this, and you see price get too far away from these shorter term averages, just like here, whenever you see this, prepare yourself that at some point you could get a pullback. And the pullback, 9 times out of 10, is just as intense as the move higher. This was a complete and total breakdown though. But how do you manage these massive moves down if you're long? You have to have a way to give yourself an edge in your trading or your investing to make these decisions that you can make in the blink of an eye and feel good doing it without overloading your chart with a million indicators of different sorts. Like you're trying to crack the Da Vinci Code. The market's telling us what it's going to do. We just have to listen to it, understand it. It's like a good relationship. Don't cut it off when it's speaking. Let it finish, and then respond. You had something in your toolbox, or you have the ability to have something in your toolbox that will help you manage this crazy volatility. This is a consolidated period through here, even on this 15-minute, and boom, you get a move up. But it's not just any move up. It's a parabolic move up accompanied by a parabolic move down. And if you don't know how to manage this, you'll end up with the square root of 0 by the time it's all over. The chart will tell us what to do. Again, we just have to follow it. And the simple cues that we use help us do that. If we just pull this volume profile back in again, and we go back to the 4-hour, what else would possibly be in here that would give us other things to evaluate from support and resistance? Well, we're going to throw in these are SMAs, simple moving averages. The 20 MA is green, the 50 is blue, and the 200 is red. So whenever you see my charts, you'll know that 20 green, 50 blue, ice blue, and the 200 is red. So what else can we tell without having a million different things going on here about this chart? What did we break up here? Price doesn't like to... Sorry?
Message broke the 20 and the 50 up there,
Yeah.
and now it looks like you're testing the 200.
All in one shot, right? So you can actually see one of the things, I'll show you this. It's like once you see it, you can't unsee it. Quite often when you see me line up levels, yes, I'm lining up price and, tops and bottoms, trying to get some sort of a support and resistance area that makes sense. But one of the other things that I will look for to kind of confirm that I'm on the right track is I look for these points in the T line and the 5 EMA, regardless of the time frame, because I've noticed that many times these levels become relevant in future trading. And I'm sure by the time we're done here today, I'll be able to show you that. But what they also do is create patterns that price also create. So as an example, it creates somewhat of a double top up here, right? 2 equal points in price. And when we look at the candles back on, we'll see that they're roughly doing the same thing. So it's not just price that creates patterns, right? Our indicators do as well, especially the ones that are working off a shorter time frame, because they're going to react quickly. So I'll look for these double tops in the 5 EMA and the T line, because when I see them, it's typically it tells me that maybe there's something going on, right? So I have these 2 equal or near equal points in price, and I know we lazily call them double tops, right? But we don't know what it is at this point. All I know is it's just 2 equal points in price with a setup that looks very similar to the ones that I like. My short term goes from white to red, so I have 2 indications of double topping, and then I've got my shorter term average sensing the fade, and then I get a signal. That's it. That's all I got to do. And when price fails like it did, basically breaking the 20 and 50 all in one swipe, there's a message in that as well. So we have the T line and the 5 EMA are guiding us in and out of the trade, one acting as a trigger and one giving you that early indication that you might want to have your eyes on. You have a breakdown now of what you realize is the 50-day moving average and the 20. But when you break the 50, at least in my school, it's not a good thing. So that would have meant something to me, that maybe there's more to come, right? Again, this is what we see up here. We know that's the point of control, and we know that's the lower range, right? So when we get our breakdown, and that divergence is as intense as it is, it's pretty hard not to find the point of control. And we do. And if we didn't, the chart would tell us that too. But it does give us a target. And what happens the first time you test major moving average? When you break it. Everybody who's in here who's watched these streams for more than 5 minutes will tell you that the first attempts typically fail. Or as our friend Carp says, the first mouse gets the squeeze, the second mouse gets the cheese. This guy got the squeeze. First attempts typically fail. Is it a trade? Sure. But those first attempts typically fail. And they typically fail in a volatile market or in a regular market. It has nothing to do with the speed and pace of which price is going up and down. It's all how price behaves around these levels. So I've been staring at these things for 25 years, and this is the only thing that's been consistent, is how price reacts. The markets have changed. The velocity at which trading happens has changed. With automated trading and so on, it's pretty intense. We're all aware of it. But how price reacts has not. And we've shown you that in these streams time and time and time again. And this is repetitive as all get out, I get it. But that's how you learn, right? This is a language that you have to learn, and it does, there is some refinement that you have to do from time to time. But this is pretty simple. Double tops, breaking of major moving averages, the simple notification that trend is changing and then getting signals. Now what we have are ways to manage our trade. First attempt at the 20 fails. This one passes. First attempt at the 50 fails. And you got no love from the 200 on here at all. None. That's not good. Like, we could simply, we could just layer these things on one at a time and we would see. This is simple stuff. It's not complicated. Break the 50, ice hole failure in other words, because the ice blew. First touch to the 20, fail. First touch to the 50, fail. No love from the 200, which is not a good sign. And you're breaking the point of control. So does anyone have any idea what the downside target would be, assuming this continues? This low, right? We're going to take out the previous wave's low. And now that we know that the lower value range is down here, it would probably become a target too. That's it. Break one level, find the next. Keep an eye on those first attempts that typically fail. This is kind of why you don't want to necessarily be longing into resistance, because this is the phenomenon that you're longing into. And you don't really want to do that. And part of this whole process is that what we see on one time frame, as far as the methodologies that we use to monitor and track price, is the same on all time frames. So what we just talked about on the 4-hour and how we showed it falling into the gap on the volume profile, because everything is fractal, that's where the time frames come in. So what we saw on the 4-hour could very likely unfold now on the daily, right? What would our first target be? Well, on the daily, we got a nice early signal here that there was something up. We break the 20 back here on the 29th of May. Try to challenge the T-line and fail. We roll over. We're taking out the previous wave's low. Now on the daily, the next target would be the 50, which just so happens to fall into that gap. And these gaps, when there's downside momentum, they're like a hot knife through butter on the downside, because think of it as there's basically nothing there. There's nothing in these areas to hold price up. Won't find anything until down here, in all likelihood. And guess what? In comes the 200 MA at the same time. And typically, time and price will find a way to come together. That's really what's happening. Time, in the sense of the average, and price will find a way to meet. And they will meet where there's a path of least resistance in many cases. That's what the gaps are, paths of least resistance. They're formed by these parabolic candles up, which are essentially filled with fairy dust and air. There's nothing in them to hold them up. There's nothing substantive in there. That's how the gaps get created. And knowing where these gaps are on your chart, I find incredibly useful. One of the most valuable things, certainly in the top 3, that I've been able to add in the last several years is the volume profiles. Without them, it almost feels like, if you play sports or something and you're used to wearing certain equipment, and then all of a sudden you don't have all your gear, and you feel a little bit lost. Like I feel a little bit lost, admittedly, when I don't have the volume profile on my chart. I know that price will be attracted to the 50, and I know that as long as this divergence is intact, that my downtrend is still valid. I understand I'm taking out the previous wave's low, but I sure like to see where the shelves are and those gaps, because knowing that will help me understand how quickly or slowly it might take to get where price, I think, wants to go. You get into those gappy areas, and that can happen quicker. If there's no gaps there, you just get chewed up and chewed up and chewed up with time. There, better. Right? I feel better seeing this. I feel better knowing the point of control is here, and I really like knowing that this big gap down here is here too. A lot. Because note to self, if we break down south of the point of control, and this shelf isn't able to hold us up, and you fail the 200, because in all likelihood they'll all be in the same neighborhood, then the downside risk, because that's our job, right? The downside risk, or opportunity, depending how we're looking at it, is significant. Brings you down to 86.7. We need to know these things. Or you as a trader or an investor need to know these things, I believe. But as a trader, this stuff's really valuable. So just like this move up, where you never got a break in that divergence and it was telling you to stay in the trade, stay in the trade, stay in the trade, the same thing applies on the way down. And we just stay in this trade until it's invalidated. And the only time it's going to get problematic for you is if you're highly leveraged. Right? Like all this, if you're, someone reached out to me this week and says, I'm doing everything I'm told, but I can't seem to get anywhere. And then once you start to peel back the onion, it's the high leverage, right? Like they're 110% correct on where they believed price was going, but because the leverage was so high, you never got a chance to get there, because you'd get stopped out or liquidated, or a combination of all those things in the process of trying to make a good trade. So that's the only time that where you're going to have problems, is if you're highly leveraged. And if you're highly leveraged in a volatile environment, if you're on the wrong side of something, or even if you're on the right side of it and it goes sideways on you or turns the other direction, you don't have a lot of time in a volatile market to fix it if you're not properly risked up. Like I think I said last week, I've been doing some trading in the mornings, and it was like before our last stream. Like I said, I got stopped out 4 or 5 times before noon. until I landed on one that ran. I have no problem with that. I'd rather, take off a tiny bit than lose a lot. But if you're too highly levered, it makes, you got to shorten the time frames up because you're probably trading shorter time frames. Like, this is your nightmare. This is your nightmare. It's like, oh, I was way ahead, but I didn't take it off. And then I was like all the way back down again. And then I was way ahead. And then I was like, shit, I'm stopped out or liquidated. Right? Is there something going on here as we're talking? Because this is a little bit cray-cray. So the indexes just went red, I guess. So, yeah, this is, here we are. Bitcoin's really sunk in the time that we've been live, but it's literally doing on the daily what we're talking about. And we don't have a crystal ball here. We've been talking about this for the better part of a week or two as this kind of unfolds. Break one level, find the next, path of least resistance, and draws for price. That's as simple as I could possibly make it, aside from literally sitting down with someone and holding their hand. Loading our charts with indicators, whether we're familiar with them or not, isn't necessarily always in our best interest. Now, I will admit that I use moving averages as targets, along with those benches of past price or liquidity and gaps in the volume profile. And yeah, sometimes it gets colorful. I get it, right? But they're your charts. You know what you're looking at. These are just, SMAs. That's all they are. And I'm just using them because I want to know when they're broken. And I want to know where they are for support and resistance. Whether I'm running 3 or 5 or 6, doesn't matter. I know what I'm looking at. But it's not like I have 12 different indicators of totally different in nature. Right? And I see that sometimes and I go, my goodness, how does anyone make sense of this? If it's a lot for people that are familiar with looking at a chart, it's probably a lot for the person that set it up at the end of the day. So we don't need to be magicians. You don't need to have any sort of superpower other than the ability to understand and filter out the noise, first off, and understand that all we have to do now is do what we're told. I didn't have the luxury when I kind of hit my first big market turmoil thing of understanding this system. It's all post that. I was doing what I described. Indicators, 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 information, 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 trying to understand what's going on in this crazy world we live in. Today, when faced with the very same situation, my response is totally different. First off, I'm not looking for the reason why this is happening anymore. I'm indifferent to all that stuff. I really don't care the why it's happening. It's all I am interested in is, can I identify these things on the chart effectively? So if I'm down here and caught a buy signal because the chart told me to do that, and you can do it too, and then took my money off up here, which anybody can do because it's all signal based, you're just doing what you're told, in understanding what happens to price as it reaches certain levels. Because all we're doing is following money flows. That's it. In the most simplistic way that we can, that in the most highly effective way that I've been able to figure out. And I didn't have this when I encountered the market the first time. So I don't care about the why anymore. I'm just paying attention to what price is telling me. That's it. And when the market says, I want to go for a run, then go for a run. And when it wants to tell you it wants to go on a vacation, it's probably going to go on a vacation. But it's telling us what it wants to do. And when you do this over and over and over again, it's going to maybe look like you have superpowers, but it's just because you're a good listener. That's it. I don't mean to burst anybody's bubble, but that's all it means. It just means that we're good listeners and we did what we were told. The market told us what it wanted to do. Back up here, it told us what it wanted to do. This is the Dow. And this is February 20th. Is this a consolidated level? Yes. Do we have what appears to be two equal points of price? Yes. Add in what I just explained a few minutes ago, the T line and the 5 EMA creating a similar setup, and what happens to price. Now, could you, if you were going to go short, could you have taken this one or probably something else in here, like obviously traders were doing? Yes. And would it have instantly worked out? No. But if price did shoot up, you had stops in place, so that wasn't going to be an issue, and you'd get stopped out. No big deal. But if you were right, eventually, again, you had your stops in place here too. But this was the one that fell off a cliff. And anybody who's in our Telegram or in the Discord that I'm in, I'll tell you that this is what scared me. Right? This one. And price just plummeted. Why? Don't know. We can make some good assumptions, right? I'll tariff this and so on and so forth. But at the end of the day, the chart was telling us what was going on. Right? Like, this happened quick. You fail the 20, you breach the T line and the 5 EMA, you get instant divergence. Short term turns red, trading below all these levels. These are another example of those candles we spoke about before, except this is on the Dow. The divergence is still there, giving you an opportunity to reload short. Boom, boom, boom. All we're doing is following the chart. And I'm sure there's millions of other people that are doing this too. And I'm not the only person that ever thought of this or anything like that. I don't think. But maybe what we have done is put it all together into an easy to understand system so that you can manage this nonsense. Right? This is crazy. The big fall was crazy. But what price is doing is still the same. In here, short-term average was telling you we're going to fall. In here, it tells you you're going to move again. Or actually right in here, sorry. So even if you took that short, it would only last for a little while. But you're going to get another message to tell you, hey, it's okay, we're moving higher. And this is where people are going to be saying, oh, the market doesn't deserve to be this high, it doesn't deserve to be this high. And we don't care. Because you're indifferent to price. You're just following the chart. That's it. That is it. Like, it's the simplest game you learn to play as you're a child. That's all you're doing. Just follow the chart. It's so easy to get sucked into the market tornado, into the economic news, into the company news, into the news that comes daily out of the White House or every 10 minutes. It's easy to get sucked into that. And it's this action-reaction that's happening. That's all this was, right? Action-reaction. That's all this was. Is this normal? No. It's not. Nor is it healthy. But it doesn't mean that you can't survive within it. When it's volatile like this, the first thing you should probably consider doing is stretching out the time frames. Because, this stuff will move so quickly on the intraday it's very easy to get bounced around and chopped up. Right? But on the, on longer time frames, it's easier to manage. This is the kind of run that everyone's kind of comfortable with. Nice, steady moves up, no drama. You expect a little resistance at the 50. It's the first time you've seen it. Boom, boom, boom. You hit it 4 or 5 times, and then you go on your merry way. What do you find in here? Is this, well, I guess that kind of counts, but this is essentially your first touch of the 20, and you get some support, and now you're trading on the north side of the T-line again and the 5 EMA. So all we're doing is following. And it's the simple things that will get you farther, quicker. Diving into the forensics of indicator science will probably just cause you nightmares. Just follow, right? This is the daily chart of oil. Now it's taken a beating. But what do we know about how price behaves? Like, what would have my attention about this chart? The activity it's getting at the 50-day moving average. Now, yeah, everybody knows my number for oil is actually a little bit lower still. 61.66 was it, and it's obviously taken that out. And you've had, it's been allergic to these levels on the way down. But this is the stuff that gets my attention. Sustained price above the 50 on the daily, doesn't matter the asset, is something that I watch. You know how bad it is when we fail the 50, right? And we get that, you fall through the ice. Well, once you get above the ice, it can create a lot of stability for you. And that's kind of what I'm watching here. Is this thing ready to go take the next level? Start pecking away up here, at 66, 67, to try and stretch out for the 200? Maybe. Right? We're going to find out. But this is what we do. We know that when price is at the 50, we have to pay attention. We're either going to fail again, like here, and then rinse and repeat on the way down, and that's how we find some of those lower levels. Or you actually bounce here, and then you start to look to take out the previous wave's highs. That's the up version, that's the down version, and then you could chatter along the 50 and the 20 here for a while, but I don't believe that's going to happen. I think something will happen here at these two averages. And look, look at the MACD. So what does the MACD tell us? This is the daily MACD for oil. You've finally broken the moving average and signal line, which is bullish. You have divergence between the two, also bullish. So takeaway is MACD's bullish. Same with the Fisher transform. I love this because it filters out noise. Like, this whole thing is built off of 3 pillars: fibs, filters, and fractals. The fibs we use to try and find those support and resistance levels. The filters are things like the T-line, the 5 EMA, the Fisher transform, because it creates a Gaussian channel which filters noise. But let's use our fibs. Let's just take this low really quick. Boom. So what do the fibs tell us? Just doing this quick and dirty, fib 618 puts us at 88.705. When we flip on the volume profile again, where did we say that we were going to find a little bit of opportunity? 86.5, right? 86.7. 88.7 is 618. So how comfortable do I feel that if this downtrend was to continue, that those are legitimate targets. Pretty darn comfortable. And where does 618 and this 88.7 land? The deepest part of the gap and the start of a shelf. That's not accidental. So if this downtrend continues, targets are probably the 50, which falls into your gap, so you can, we know that if we get into this area, price can drop quickly. This would be the first touch of the 50, so you would hope for some support to challenge these levels again. But if you do fail it, you have the POC and the 200-day moving average here as a draw for price. And if you don't get any support here, we just talked about where you go. Right, and that's kind of it sounds like the disaster scenario, but with crypto it can move there pretty quick. So, but all of this is simple, and it's simple for a reason, because it doesn't need to be complicated, especially when the world feels like it's more than complicated enough on its own. That was, one of the biggest learnings for me, was to keep things simple as often as possible. And although this looks really simple, hey, it's just a handful of lines and some gaps and stuff like that. It's the understanding of what the language is and how price behaves that is really the backbone of the system itself, right? Trading into support and resistance, the gaps, all of that. But it's all based around the language of the market and what the chart tells us through that language. So anybody have any questions today? I'm sorry, I rambled a lot, so I apologize for that. Anyone? Because if not, I'm going to keep going.
I missed that, Blunt. What was that?
You guys have any questions at all? Because I've been rambling a lot, so.
It's a good ramble. It's a good ramble, Blunt. You're giving valid insight, bro.
So let's look at Solana, because I know. There it is. Now, what do we know about this chart? Super simple stuff. Resistance at the 200 MA. Right, that's our most basic bull-bear indicator. We've bumped our head on it, basically creating that double top type of look. And also another example of where your short-term averages line up perfectly. You get a sell signal, failing the 20 at the 200. Why would you not take it? And if that's the case, you can't tell me that you don't have a target if you've been in these streams for more than 10 minutes. Because if we break one level, and in this case it's the 20-day moving average, and now we're trading below the T line and the 5 EMA, so we know we're in a confirmed downtrend. But what would a legitimate, reasonable target be? The 50-day moving average.
Total breakdown.
Right? We don't know what comes, after we take the short in this case. But we do have enough experience and enough history to know that the 50 is a legitimate target on the way down. And it sure was. And eventually broke down. And you would know, because of the divergence that's still intact, like this is one of those examples where price kind of has an impulse down and then goes sideways, and then when it gets to these levels, it falls again. Right? Arc up, doesn't have enough price momentum to change trend, so you arc up and then you pull back and take out the previous wave's low. Probably looking for this, actually. But that's not super hard. Now, when we're looking at this, are we thinking about how crazy the market is right now? No. Because we've been able to filter out all of its BS. All the stuff that we really don't need to listen to, we can filter out. Because we have the chart to listen to. This is the relationship that you're going to have with your chart, probably to the dismay of your partners, will be the most intimate in your lives if you do it right. This thing, your chart, will be as reliable as anything else you've ever had in your world. Just, accept it for what it is. It's not a perfect science. But it is a very good representation that we've shown here time and time again of how price behaves. And anybody can learn this. And when we were talking kind of before we went on our stream today, like, I know I beat you guys over the head about how anybody can do this. It's because it's true. Like, I'm just a guy, right? I am just a guy, like you. I didn't work at Goldman Sachs. I never went to MIT. I don't think I'm a village idiot or anything like that, but isn't that the kind of thing that you would expect? Right? That's what you're told. You have to have a financial background. You have to have this. You have to have that. Should be an accountant. Should be this. Blah, 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 blah. I'm just a guy, just like you. And I found something that I really love, that makes sense to me. And yeah, maybe I get my head around it more so than the average bear. But there's nothing special about me. This is just a culmination of years of frustration and excitement and all of those things that you've all gone through. But hopefully, what some of the stuff we're showing here today is that you don't have to get sucked into the dynamics of the market thinking that it's just one swirling toilet bowl constantly. It's going to be that anyways. That should be your expectation, even on a good day. But the only way we manage these things is simply by watching the chart. And I know that I'm kind of hardcore technical. I get that, and I don't. This is no disrespect to fundamental and people that do fundamental analysis or make their decisions based on fundamentals. I just believe that everything that you're reading, whether it be accurate or not, finds its way onto the chart in an accurate way. It's what money's doing, not what people are saying. And that's what's important. And it might take a few times of realizing, maybe not out loud, maybe it's in your kind of quiet contemplation, that at some point in time, someone that you were looked up to was completely and totally full of it. And that ultimately, it's the price on the chart and how it behaves that you can learn in no time at all. Like I said before, I'm thinking about doing a boot camp. You can come out of it in a weekend and being comfortable on how to place trades with proper risk management. We show it here all the time. And I know that you guys are doing this because you tell me you are, which is fantastic. And keep in mind, you're doing it in a crazy, crazy time. Which is, pat yourselves on the back, right? But how do you survive? Keep it simple. Understand that this is a language, and all you have to do is listen. Is it an accident that this Tesla chart found itself? So what happens when you're trading too far away from the 20, 50, and 200 MAs? We talk about this all the time. Like, this is a healthy run. There's nothing wrong with a good run up. We all love those. But what I want to show you is that they don't last forever. I, there is no school of price only goes up and price never comes down. It is an ebb and flow, which involves moves up, moves down, and moves sideways. But when this gets exhausted and you're trading above the 20, 50, and 200 like this, we talk about it all the time, at some point you are going to come back and test those levels again. What's this? See this? This is another example of what I'm talking about. Look, you don't need a degree to know that is what this looks like. You just have to, right? You just have to look at it enough times. 2 equal points in price. This is Tesla's daily. And why are they relevant when we see them? Well, because the people that didn't get out up here, as soon as they get their next chance, they usually take it. That's kind of what's going on. And price retraces back to the 20, which you know is going to happen. And like we talk in here, but it's been a while, so does it hold? Right? Breaks the 20, first attempt, a little bit of love, but it fails, finds the 50, and then breaks them both at the same time. And if you weren't out somewhere up here, this is when you're out for sure. Right? It doesn't matter whether we're looking at stocks, crypto, or oil, or anything. Here you go. You break the 20 and the 50, you got the divergence, your sell signal was way up here, but you're off to the races to the short side. Here's a move up. This is just a few green candles in a downtrend. This is just a retracement higher. It doesn't change trend. And our super simple little tool here is telling us that you're still in a downtrend. And if, we're looking at it from the perspective of the chart being complete, well, that's what it looks like as it would have unfolded. You would have been absolutely short up here. And then it's just a matter of, what's the chart telling you to do? Still telling you to stay short. Can you trust your chart? Right, this is something that you're going to be challenged with, when we're not doing these streams, is trusting your chart. So assuming that you would have shorted when you broke the 50 or before, you're well ahead on this trade. And you would see here that this is an early indication coming out of this first move down that you're going to get a little bit of a move higher. This is the one that will kill people all the time. Doesn't matter the time frame. Does the T line and the 5 EMA, do they cross? Do they, is there enough price momentum to pull the 5 up through the T line and change trend and start shooting for the 20 or the 50? Nope. How powerful is this, right? Like when you think of it in the context of having to make decisions, this divergence between these two levels is really, really key. This is what will keep you in and out of trouble. And this is all I do. I follow this stuff. As long as that divergence is there, I trust my chart, right? And of course, you're thinking here, oh, this is the one that's going to do it, right? Somewhere up in here. And then what happens? It rolls over. Because the divergence was telling you you were still able to go short. That was another short entry. A little bit of love at the 200 MA. And then right back down. Almost to the lower value range. Just like we showed on Bitcoin earlier. Nice clean signal on the way up. Is it chattery trading? Like this is kind of messy? Yeah, it is. However, for as messy as the trading is, this very simple methodology of allowing price to ride up some key levels keeps us sane, right? It just keeps us sane. As long as this divergence is intact, we know we're okay. But we also know that when it's over, we know this is the point of control, so we know that this is gappy stuff on either side of it, and when it breaks down, it's going to look for these gaps. Right? We know this instinctively because we've seen it a million times. It has nothing to do with the crystal ball. We've just seen it a million times. So we would know, start to roll over at this upper value range. What's that telling you? It's telling you that the buyers are not prepared to push it into a premium. That's what it's telling you. That's what this gray area is up here on a volume profile. That's premium. And also super light trading. So you have a fail at the upper value range, confirming that nobody wants to walk across the gym floor and ask someone to dance. Price pulls back, break one level, find the next, break one level, find the next. And all of this is happening in the volume gap. That's why it's important, because it's helping me confirm that, yeah, there's a pretty good chance it'll find the 50 because of this gap. And this is another great example. I tell you all the time, mind these gaps, because price will shoot up and down real quick when it finds them. Right? You can get excited when you're trying to trade up into the other end of it, but you don't want to be on the wrong side of it or the wrong side of a trade within a volume gap either. Because you can't hit reset all the time. And let's look at layer. And I'm only showing you this chart because it was everybody's best friend until it wasn't. And price behaves no differently, right? Nice move up, little retrace, you get support, move higher, retrace, support. This is all support at the 20-day until it isn't. Does that look like two equal points in price? Sure. You get, take your candles off just for a second just to see, and you can see your 5 EMA went really quick and went red. Now we can choose to ignore it. We can choose to try and create some sort of rationale in our head that will make us think that price is still going higher. I don't know, you can spin your chair around and chew gum at the same time. Maybe that'll change the trend. I don't know. But the chart's telling you what it's going to do. You don't have to have any special knowledge other than you have to be able to do what you're told when you're told to do it. Right? That's all it was doing. Right? This thing started to fade up in here at the first top. Right? And then when it fell off a cliff, it fell off a cliff. And it didn't hide it. You look at all your indicators, stochastic RSI, MACD, the Fisher, like all of this stuff, just not getting any love. And people say, it's like, oh well, it'll, this will be the candle that'll move it higher. I don't know. It's all I know is that all through here, if someone is trying to long this, which is really why I wanted to show you this, because it's an example where something's looked like it's bottomed, and everybody wants to be the one to long the bottom.
Да здорово, пидорасы.
Pardon me?
Hello, пидорас.
Go ahead, Blunt.
Yeah, anyways, so what you've got here is just this divergence never broke.
Hi, пидорас. Hi, пидорас. Hi.
So this divergence never broke. So even though you're like, okay, this is the bottom. This is the bottom. No, this is the bottom. Oh, this is the top I load, or this is the bottom I'm loading up. Oh crap, it's not the top, right? And the beat goes on. And it's just a matter of You took out the previous wave's low here, and then the downtrend continued. You had a little slight move higher, and you're taking out the previous wave's low now too. So this is really good to use when you're trying to bottom feed. Because I know there are people trying to bottom feed this chart because they've told me that's what they're trading. And they're trying to long this thing, hoping they're going to get another ginormous move higher. Well, it doesn't work that way. Like, I'm just as disappointed that they're trying to long here, knowing that this is still diverged with no confirmation that the market wants to move higher, as I would be if they were trying to tell me they were trying to long this candle. Like, it's equally as ridiculous to me. The chart's not telling you it's okay to long it yet, so just leave it alone. Right? Wait for the right opportunity. Maybe you could spend some time on a 4-hour trying to find an early window into the daily, but the 4-hour should just tell you that you're nowhere near close. Failure of the 50. So here's your break one level, find the next, first attempts fail, failure again, and so on and so on. Like, you're probably thinking we're on the same chart all the time. We're not. Right? We're not. We're on all kinds of different charts. And that's the point, because it doesn't matter. It doesn't matter. Nor does it matter the asset. It just doesn't matter. You can pretend that it does, but it does not. NVIDIA. I know we looked at it on Tuesday. So, where are we? What's going on? So we've had a big move higher. Break the lower value range. You break the 50 in here. Price just continues to ride up this level. As long as price is doing this, this is a bullish move higher. And this is still a bullish chart. The reason I'm showing it to you is because I want you to notice where, and we're going to be able to watch this over the next few days, but notice where price is starting to get a little bit of resistance here at the upper value range. So are we going to break through this upper value range? And then when we do, we're going to be looking for previous waves highs. And of course, once that starts, it's going to be all talk about all-time highs on this thing. But pay attention to where this resistance starts to show up. It's breached it a bit before, but it always pulls back. Right? Technically, the chart's still bullish. You had a nice clean entry signal, whether you took the early one with the doji or whether you took the valid confirmed one. Either is good, and you're still in it. But we are trading above the 20, the 50, and the 200. So we know, just like we showed on the previous chart, that you're going to come back and eventually test. Time and price will come together for that to happen. Will the first test bounce? We'll see. Right? But I think it's interesting where this resistance is starting to show up. And we're going to come back and we'll check this chart just like we did the Bitcoin 4-hour. Does anybody have any charts they want to look at today?
Could we take a look at render?
Sure. I think it's RMDR, right? Yeah.
Yes, sir.
There you go. So, also a little bit of resistance at the 200.
Almost looks identical to like Solana's chart.
It does. It looks very similar, yeah. And look, they're probably all going to look a little bit the same. I think what's interesting about this though is that this thing fell. I don't want to say off a cliff, but render did have a really nice move higher. But I don't like how it failed the point of control. Like it literally just fell into that gap. And it doesn't look like it's coming out of it either. So this is the weekly. Yeah. So you're getting a sell signal this week. Yeah, I don't know, bud. I don't. Are we?
You got
I'm
two,
thinking.
you got two murder M's back to back there.
Yeah, I. My gut says it wants to come back and test this low. You know, especially with the stochastic RSI, the Fisher, and even the MACD starting to look a little bit weak on the weekly. And I think that you could probably spend a little more time on weekly charts, like when you're doing your own analysis, because the weekly will help with taking some noise out. Again, that's the daily, so yeah, it's gonna want this. If this thing continues to sag, so I want you to notice this. So failed to 50 at this volume shelf here, where there was already light trading, fell into that gap real hard, and now you got another one. So this little pause in here is this. It's just your price sitting on that tiny bit of a shelf. Then it looks like it's going to fall off into this one. And actually, you know, it can get pretty sketchy when you... I don't like this chart right now at all, actually. It looks... So let me just say this. I'm not going to spend any time trying to find a long in here right now. But I might find some shorts, you know.
Like, looks like it's skiing downhill, man.
Yeah, so this is the 4 hour, and you can see that the 4 hour is taken out this low. Yeah, yeesh. Now, if you want to trade something short, maybe, you know, the trend is obviously down, right? That's, you don't want to be pushing water uphill. But it looks like everything...
For sure, definitely don't want to do that.
No, everything looks really red today, so whatever we're going to look at crypto-wise, it will probably be red. Here's this thing that I trade from time to time, as you guys know. Same thing, 200-day resistance, right? Just like on the other two. Failing the POC, and this essentially is a gap, right, where it's just kind of this sliding indent, and you know, price will find it difficult to get some support. It's broken one level, looking for the next, and it's probably looking for the 50. But what makes it hard to trade? The volatility. See the wicks? Like this nasty ass wicks, right? These are the things that make it hard to trade. So you have to accept the fact that you're probably going to hit your stops more often than not, right? And that's okay. But when you're on the right side of something and the time comes, you know, to take your money off, then do that, right? Like these are nice runs up, sure, but you don't want to be part of giving it all away. So we've actually broken the 50 here on the 12 hour, took a move up and failed to 50 in the 20, and it looks like this thing wants lower as well. Anybody else? Anyone? Does this make sense?
I got one more, if you don't mind.
Yeah, of course.
Algorand.
Yeah.
ALGO.
I remember this one. Let's start with the weekly because I have a feeling, yeah. So, well, a picture tells 1,000 words, and I just know differently than those other charts. I think this was an example of here's your test and fail on the weekly. That's the weekly 20. Price is looking to take out this low. That's 16 cents. And when it does that, it's doing that, it looks like in a little bit of a kind of a gappy area in here. And for all intents and purposes, I actually think it'll probably go lower. And I'm not saying these things to hurt people's feelings or anything like that, or it's not a commentary on the symbol or anything like that. It's just what the chart tells us. Right? And it could be anything we look at. This is TNT, which is the 10-year. It's an ETF of the 10-year Treasury. These are actually just kind of some ranges that I've drawn on here, but the chart tells us the same thing it told us on oil and Bitcoin and everything else. It gives you clear signals when it's moving higher. We're showing you where the support is, and it's showing you when things are about to change. We talk about points. When you're short term, doesn't matter if it's a 5-minute chart or a weekly chart, but when your short term averages point like this, that's an indication of an intense change in direction. But just as clean and just as simple. So a nice move higher, retracement down. These are just red candles in an uptrend, and goes higher. Move down, move up, move down, move up, move down. What's next? Right? It's just a constant ebb and flow of what we see on the charts. And it doesn't matter what we're looking at, the process is the same. That's it. XRP, weekly XRP. You just don't know when you catch one that breaks, right? Back here, it looked like just another XRP long to you until it didn't. Right? Has anything, just XRP weekly, again, time frame doesn't matter. Nice, because price went flat for so long, all your major moving averages are all twisted together. Right? We've been showing this for years, and when they unload, it's usually with some velocity, and that's exactly what happened here. But again, everything that we see is the same as we've shown many times before. Love candles at the 50. This is a perfect move with the consolidation here, but I love candles off the 50 and or 20, especially the 50. The divergence between these two levels, the T line and the 5 EMA. 5 EMA goes white right away. The divergence between these two is telling you that this is a parabolic move. And all of this, you didn't even break the T line until, a week or so later, a couple weeks later. And then it was just basically going flat again. Right? But you don't know what comes after this little candle down here. You just don't. But you got to be at the right place at the right time to catch them, right? Which is why we don't want you trading 100 things or monitoring 100 assets, because you're not going to be able to physically do it all. Find a handful of things that you like to trade and get really, really close to the charts. And it does matter. You'll feel more comfortable as time goes on.
Absolutely, you get that that rhythm going. You start to see how the chart
Yeah,
flows in a sense over time.
yeah, absolutely. I wonder why it's not loading. So,
If you could look at one more,
of
I have
course.
one more.
Okay, you just cut out. So,
Oh, it's Super Artificial Intelligence Alliance.
what's the ticker for that?
FET, it's FET, FET, but they combined with like a whole like three other companies, so they ended up naming themselves that.
Is it a crypto or is it a
Yep,
comp?
it's a crypto. It's Fetch AI.
Okay. All right, let's let this load up. Okay, so you're probably more interested in, what's next than where it's been. I think the where it's been part you're probably familiar with. So the where it's going part. So this is obviously some sort of a reversal that's been taking place after this big move down. So you got, again, nice clean signals, right? Running off this script, and nice clean signals that there's a directional change. Break the 20. Well, actually, you kind of do a little chatter here between the 20 and 50, and that's fine. That's totally appropriate. But the divergence is intact, so you know you're good. You get a lot of support from the 20. This is a real test. Like if you fail to 50, this could get super sketchy. Let's look at the 4 hour.
Kind of looking like a Bitcoin.
Mm-hmm. It does, doesn't it? Like you've pretty much broken everything here. Like this, like all the support that you could ever want on the 4 hour, 20, 50, 200 is right here, and it broke it like it was nothing. So that's not a super good sign. It's probably the bulk of that daily candle, which makes sense. So it's the 400, the 4 hour 200. This is the daily 50. Makes sense. So if you break the 50 here, it's a problem. Because what you're going to do is you're going to start looking for previous waves lows. That's going to take us down here to 65. And you've already would have slid through a gap in some light trading. So so what are we doing? We're looking for benches of past price where this thing could find a home. 53.8. Somewhere in here. So basically, it wants to eat up this gap. It's probably not what you wanted to hear, right?
Honestly, we trying to monetize these blunts. So if it tells us to go one direction or the other, I'm not biased.
Yeah.
You know.
No, I hear you. Yeah,
But yeah, it'd be nice if it got that bounce off that 50 though, definitely, because then that's a huge.
you see, like this is actually, like for me, I love this chart right now actually because it gives me two decent options. And again, all we're looking at is the volume profile and handful of moving averages. If we fail the 50, you got targets of previous waves lows like at 65, and then ultimately down here, that's my target. To the upside, to your point about bouncing, you're going to, the upside is that you test the upper value range or these highs and or the 200 on the daily, which would be a first maybe if we'll see how when it gets there. But you got this big gap to the upside, right? That's your upside opportunity, is this gap. But this does not look like a candle that wants to bounce right now, does it?
Nah.
But the point is there's a trade there for you, right? It's either going to be a real nice short if it does what we just described, or a super nice long if it was to break out. You just can't have a bias, right? This is where we get in trouble. What's the chart telling us? The chart's telling us that you're trading below the 200, so you're bearish. Have to acknowledge that. You're working off a current sell signal. You pulled back and found support only to fail to break out. And now you're testing support again in a sketchy area. So that's the downside is going to be, this will happen quick if it does fall, because there's nothing there to hold it up. A lot of these charts look like this today. So, Bitcoin's daily chart,
It's
a little heavier.
It's the pre-weekend chart, right? Everybody's trying to have a good time this weekend.
Yeah, I hear you. But all of this volatility, you can either get sucked into its tornado. And what is the tornado? The tornado is the 3 or 4 times daily you get news out of the White House for something. It's the noise that we take in social media. It's all of that stuff. No one, in my day, it used to be just like business news, right? Before the days of social media, it was the business news that was the noise. Now it's that plus all this other stuff. It's noisier than ever before. It's more chaotic than ever before. And you have to find a way to get rid of that noise. And the best way that I've found to manage all of the volatility in the markets and the noise that comes along with it is to keep a simple system that's reliable. Like, the one thing about this system is it's not like it works one day and then doesn't work the next. Because it's interpreting what the market's telling us. That's why. That's all it's doing, right? We're picking up what the market is telling us, and we have a systematic approach to manage that information. Long and short, that's what we're doing. That's what this does. And anybody can do it. So, next week we're going to see, how did Bitcoin react on the daily? Does it, fall into this gap and find the 50 and perhaps the point of control? Just like we talked about last week on the 4-hour, and it did exactly that. Because everything's fractal. What we see on one time frame, we'll see on another. It's that whole Fibonacci world all wrapped up into one, right? But if there aren't any questions, we can pack it up for today and start to think about what next Tuesday, or this coming Tuesday, is going to look like. We're obviously on BTC. There's a little bit of a pullback in play here. Keep in mind, this is structural support too, right? Like these levels in here. Yeah. This is kind of structural, so if you do fade it, to sit and stay forever in the middle of this big parabolic candle, I don't think is likely. I think it'll sink more. But it's going to take time to get there, right? I think one of the things you've realized now is that it takes longer than you feel it should for price to do the things that you're expecting it to do. And sometimes we forget about the ebbs and flows that are required in order to get to our anticipated landing spot. but we have more than enough tools to derive with reasonable probability where price is going on a repeated basis. I think that we've demonstrated. And it doesn't matter what we're looking at. So whether you're trading crypto or whether you're trading stocks or commodities or indexes or futures or whatever it is you're trading, learning how to read price on a chart is critical, in my opinion, to your success or failure. If you're successful without it, you'll be more successful with it. But no, if there's not anything else, we will of course draw for the winners of the trading bonuses, and they arrive in your account when they're distributed, and then you'll get an email saying that there's a trading bonus in your account. That's how you'll know you've won. And it'll certainly be more than $1. So you know that. I think they're $50 each. So
That's for BYDFi,
that's right.
right?
That's right.
BYDFi.
For BitFi, yeah. And BitFi is a really nice exchange. Um, if you're not on there, I think everyone needs more than one no KYC option. At least that's what you guys in my Telegram have told me, because of geo stuff, and I get it. So we have three. Like we have BitFi, Blowfin, and WeX, and they're all really good. But BitFi is super slick, though. I don't know if you've noticed that, but I find it really. I don't know if it's the interface or what it is, but it is a nice exchange.
And I'm signed up for all three.
I know. I use all, well, as you know, because you're in my Telegram group, but you'll see stuff in there from all three of them. But I'm trading the same thing all the time. You notice that? So it's like,
Yep. Same tickers,
yeah.
different platform.
Yeah. Like I don't trade a ton of stuff. I trade a handful of tickers. I monitor a handful of things that keep me on top of where I think we're going, and that's it. Right? And I do that because a lot of it is just noise otherwise. Right? So I have a real good understanding of what I'm watching, and when I see opportunities in them, I feel comfortable in taking those trades. Right? And anything that we can do to make ourselves more confident, we're in the midst of, and that sounds like a small thing, but when you're in a trade and you don't feel confident, you'll know exactly what I'm talking about.
Yeah.
Right? And that's all we're trying to do is allow you to feel more confident. Just layer confidence on top of confidence on top of confidence without overwhelming you in analysis. Right? This stuff that you're looking at is signal driven. Right? It's signal driven based on what I believe is the language of the market. It gives us safe entries if we're long, or safe entries if we're short, and a mechanism to manage the trade you're in once you're in it. So, all right. But yeah, I guess we'll call it for today. If there aren't any other questions, and we'll pick this up, I guess, on Tuesday of next week at 12 noon. And I think next week we should have a couple guests, which is always kind of fun. So stay tuned on that.
Hey, we appreciate it, Bunt, like always. Another good stream.
You guys are
Hey,
awesome.
man, you almost, I haven't checked now. I'm not in front of the PC, but man, the views, they're getting up there.
Oh, really? Oh, that's good.
Oh, yeah. It was like 180.
Really? Because
If not, yeah.
when I'm doing this, I'm not looking at any of that stuff. Like, I don't see you guys in your Telegram, and I don't see the views or anything else. I'm really just looking at the chart, so I honestly don't have any clue until afterward how many people were taking a look. So I'm glad that we're getting the views, and I think that we're showing something here that everybody can use.
Value for sure.
Yeah. One of the things I love about doing this with you guys is that everything we're doing here, when we sign off, I know that you can take back to your screens and actually apply it. Right? And we spend so much time, and I admit it, I do it too, but we spend a lot of times in X spaces and stuff like that, which are sometimes interesting, but I admit that after a while of being in them, I realize that my time is better spent on my screen. That's what I'm listening to in those rooms. None of it is actionable to my trading today. Like, not one of those people showed me how to break down a chart and identify a reversal. None of them, right? They might tell me where they think interest rates are going in 10 years.
Right.
But as far as, can you apply that knowledge to your chart today? Probably not. And that's what I think hopefully people are doing, right? I know you guys are because you tell me so. But no, this is great. I'm glad we're getting the views. It's good for you guys. Like, it's good for FEG. SmartDefi.com is wicked cool. If no one understands what it is, like, to be able to tokenize anything quickly with a tool that's already developed, I think is the start of the commercialization of tokenization. Right? So that's
Yeah,
that's what crypto's missing, right? Crypto's missing the tool that does something, that has that quote unquote utility, right? Like, that's what this is. Like, this is a real tool that business could use. So that's awesome.
apologies on my behalf for contributing to some of those spaces that
Oh, I'm not talking
don't
about you. You know what I'm talking about.
make any actionable. Yo, I could only imagine Blumhouse yesterday when the rap battle was going on and shit, or the beats were playing. I was yeah, poor Blunt, man.
Oh man. Well, listen, guys. I'm sure I'll talk to you guys over the next couple days. But for those that I don't, have a great weekend, and we'll connect with everyone on Tuesday of next week. You know that you can reach me, of course, on YouTube or on X, pretty much anywhere. I'm not too hard to find. So if you have any questions for me, or you want to talk about the scripting tool that we use, just let me know, and we will see you on Tuesday next week. Have a good one, everybody. Take care.
Take care, Blunt.
We love you, Blunt.